I want to finish here with potential ideas for investment based on budget priorities. So I think just some actionable things that people can do. And of course, this is not investment advice. I will be providing some ticker names and names of companies, not just based on this budget alone, but just also based on broader geopolitical environment. So we're seeing a shift back towards natural resources, especially critical minerals that feed the energy transition, national defense, supply chain, our sovereignty, and alliance around the world. Think of the US and Europe here. Of course, there's been better relationships with the US than in the last couple of years, but in the long run, Canada and US, I believe they will become closer, tied together, most likely with Europe and Central and South America as well. I think that's what we're going to be seeing is a multipolar world where you have these big alliances across geographies, and that's how things I think will be trending in the next several decades. And I also think this direction likely doesn't change if the conservative take power. If anything, it probably gets reinforced with even more emphasis on traditional energy and fossil fuels alongside critical minerals. Now, if you look at where funding and strategic partnerships are being directed, it's towards metals like copper, nickel, rare earths, lithium, uranium. Obviously, I'm not going to name them all, but just to give you an idea, these are essential for things like EVs, grid infrastructure, semiconductor, aerospace system, military equipment. Canada has reserves of all of them. So despite us being a tough economic spot right now, Canada has a lot of advantages that other countries simply do not have. So from an investing standpoint, one area to watch is Canadian producers involved in these materials. I would try to focus personally on companies that are actually operating and generating revenues that are ideally profitable. As I started doing more research here, there's a lot of companies on the venture that are pre-revenue, for example. So these are very risky. So I would be very careful with those. They don't always have to be profitable, but pretty close to profitability where they're in a space that even if they're losing a little bit of money, the tailwinds are so great that eventually they'll become profitable, especially if governments start creating incentive for these companies. Some of the companies that I have on my radar would be Tech Resources or First Quantum on the copper side. First Quantum, they're the company with the Cobre Panama mine. Franco-Nevada has a streaming deal with First Quantum, but First Quantum is actually the operator of the mine. It's definitely going to be more dependent on that Cobre Panama mine. So keep that in mind. Tech Resources is probably a bit of a safer play when it comes to copper. Neo Performance Material, ticker NEO, they produce and process rare materials. And those are strategically important for EVs, defense, aerospace. And we've seen, obviously, a lot of this in the news. A lot of the tension between the US and China right now is happening because of these rare earth materials. I don't believe they're profitable, but they do generate revenue. So this is one that I have definitely on my radar, one that I may start like a more risky position, very, very tiny allocation, but I think there could be a whole lot of upside for this company. And especially if, for example, the Canadian government starts making strategic investment or maybe a partnership with the US government, not quite sure, but with the way the US is investing in companies it views as a strategic national interest, I wouldn't be surprised if NEO here could also see some tailwinds from that. Cameco, which is one of the largest uranium producer globally and ties directly into the renewed push for nuclear power, which was another theme in the budget. So that was mentioned quite a bit as well. There seems to be push and much more openness from this liberal government versus the Trudeau government to embrace nuclear power. So we'll have to see whether they follow through in the years to come. But I think that will likely not change whether the liberals or the conservatives are in power here. The second category that fits naturally with this theme is defense and aerospace suppliers. If you've been living under a rock, that military spending is just rising. Canada is being pushed by the US, of course, to increase its defense commitment. And we don't have some big prime contractor like a Lockheed Martin that they would have in the US, but we still have companies that are listed in Canada that are definitely part of that ecosystem. So a couple that come to mind here, CAE. They provide military and aviation simulation and training system. MDA, which provides satellite, space robotics, surveillance system with defense applications. So these are a couple of names as well. I'm sure there's other names, but I tried to stick to Canadian names here because it is the Canadian Investor Podcast. And it really isn't about short-term trades. My view is that I would look at them for 5+ years because I'm really looking at this at more as a macro shift. And that's how I invest, is I try to look at big macro themes, and then I try to find investments, whether they're specific companies or themed ETFs.